No, we should blame AI for that one 100%.
Go for it. Yeah,
So
definitely. It's
true.
AI's fault.
Okay, so what I did is I asked AI to go through my newsletter, recent news, and then I kind of curated the themes from there. So I think it came back with some pretty good stuff. I don't know about this part. I don't really like for it to like dabble into analysis as much, just because I feel like sometimes it just tries to gaslight you into what you think should be important, and it's like it was talking about how like valuations are resetting, and I think that that's generally directionally correct. But then I also read that Humana bought, Max Health or whatever, and that it was actually like a pretty high multiple. So I'm like, is that actually true in this instance? Like, probably not. But anyway, um, main themes over the past couple of months that I've seen, most of the stuff, like I said, Jim, has been, policy focused. It does seem like the M&A market is heating up a little bit, especially on kind of take private transactions and in areas that have been a little beaten down. So
Yep.
value-based care, senior care, primary, advanced primary care, those sorts of things. Um, Obviously, the biggest spotlight, in my opinion, has been on Medicare Advantage and the constant shifts and shakeups, market shakeups happening with the BUCAs and potential downstream effects of that, which would love to discuss. And
Yeah.
then on the health system side, continued relative recovery in the short term, with long term implications being around, okay, ACA subsidy expiration, and then big beautiful bill on the horizon in kind of 27 and 28. So, protect your margin now and then figure out what you're going to do in the coming years, assuming midterms don't like, shake that political makeup up. Um, so yeah, kind of getting into it. I think the first place to start is what we were already kind of alluding to, which is healthcare continues to dominate jobs growth, and um, this is big part of the cost equation, right? Like if you think about healthcare as a percentage of GDP, it's going to hit 20% in the coming years. And
Wow.
if it's $5+ trillion
Yep.
in spend, you can more or less estimate that like 40 to maybe even 50% of that is labor, right? Especially in the hospital setting. You look at a hospital's income statement and around 50% of that is labor. So um, it's kind of like an unstoppable force meets an immovable object when it comes to cost. Um, Everybody's getting employed in healthcare, and healthcare is driving the economy, right? So pick your poison, right? You either want to lower costs and automate, which CMS wants to do a lot of those things, or
Hmm.
you want the top line number to look good and the jobs numbers to look good from a political perspective across the nation. And that's kind of the dynamic you're seeing playing out. Um, I think this has a lot of implications for health systems and provider organizations in general, because, let's say you identify a use case that could cut, X number of jobs in rev cycle or whatever it is. And then you do that. And then there's a political reality around, um, you know, um, oh, Denver, I just saw your note. Uh, I'm just going to assume you're listening in Denver. It's good to see you. But yeah, yeah. So this was actually something I asked someone from Oshner. I was like, if you were able to identify a use case in AI that could cut, 20% of RCM head count or whatever it is, like, would you do that? Like, what would the considerations be? Because like that's obviously directly, attributable to your bottom line and your ability to sustain operations, especially for somewhere like Oshner, which is very Medicaid heavy in Louisiana and a generally sicker population.
Yep.
And I wouldn't say she avoided the question. She did not, but her perspective was interesting in the sense that she talked about like there's always going to be opportunities for reskilling at a health system of their size, which I thought was a pretty good, pretty interesting answer. Um, but more and more, maybe not within healthcare specifically, but like, these tech companies or other industries are going to find AI use cases and like cut down at least on the admin side, significant headcount. Something I just saw today, Block, which used to be Square, like the fintech kind of payments platform, they have 10,000 employees. The head of their company is the former head of Twitter. Um, Jack Dorsey, I think is his last name.
Oh,
And he
Dorsey,
just he
yeah.
just announced today they are cutting 4,000 jobs, which is the largest by proportion of total headcount layoff in S&P 500 history. And obviously that's the first. Um, but like you
So
think about that opportunity in healthcare, like how many probable redundancies there are just from like a policy perspective that have been made through like regulation and those sorts of things.
that's
Like
true.
that would never happen in healthcare, but like imagine if it did. Like that's how you cut costs. Um, and again, this is an extreme example. Like not every organization is Square. What does a payments company even do? I don't even know. But I think it is interesting. It raises a couple of questions around, hey, if AI continues to cut jobs, am I looking over my shoulder as an employee that made the first cut, but like maybe the next cut, I'm there and where do I
Yeah.
go?
And what can
Um,
I do? What can I do about it too? I
right,
mean,
right.
what's yeah, I
There's just
mean,
like a psychological component, right? And I think that
sure.
increases distrust with technology actually, and I can see that playing out in healthcare, where you have all these people who there's like middle management and a lot of potential um, spots for AI to automate, and then you recognize that and you want to kill it as the person in that role who sees that, hey, my job can now be reduced from 8 hours a day to 2 minutes, or whatever it is. Um, and that has implications on like kind of, like supply chain stuff and like procurement and pricing
Definitely.
and like all of
Right.
this like data aggregation, all these things that basically mostly all on the administrative side.
Right. I mean,
Yeah.
healthcare has some protection in terms of the actual in-person care delivery arenas, but a lot of those things around that, like you're saying, operational, administrative, and that, they're going to face the same pressure everybody in the broader economy does, I think. I don't know.
Yeah.
Maybe Denver has a point of view on this.
I'm the father of a 23-year-old who right now is doing a job where he's pretty sure he's training his replacement. He's in finance.
He's training his emplacement, meaning AI. He's
Yeah,
training AI.
yeah. He's pretty sure that they're going to, right. I mean,
Wow.
the
That's
company just
terrifying.
joined just 6 months before outsourced a bunch of jobs to India, but now even those people are training the
Right.
replacement with AI. So it's going to be,
Right. That used to be the big fear a generation ago, as you know, right? Was, yeah, oh, they're sending all these jobs to India, much lower cost structure. Well, now there's a whole nother logarithmic change to AI.
Yeah. Yeah, it's interesting. It's almost like innovation will create the next like recession, right? All these people and Anthropic's CEO has been on the record as saying like, you know, X% of finance jobs are going to be disintermediated and those sorts of things. And Denver, to your point, I'm glad I'm not starting out in school uh, or like starting out in a new profession right now, or like, but I'm also scared for my 2-year-old. Like, what is his reality going to look like?
Well,
Um,
he has time to, assess the situation and adapt,
that's true.
especially with good mentoring, from
But
you.
then, yeah, but then you ask about, yeah, I hope so. Maybe he'll just, continue to write hospitalogy, which will probably also be replaced in 2 years. So
I
we'll
don't
see.
think so. That's high quality, analytic brain power there,
I
baby.
hope so. I appreciate that. Um,
I don't know if you saw on the Wall Street Journal yesterday, but it had several of the AI CEOs like Dario Amodei was on there. A bunch of other people asking, what do you tell your kids? It was not
Yeah.
encouraging to read the responses of the CEOs of these AI companies, what they're telling their teens and young 20s children.
Oh, I gotta
yeah.
look for that. Was that a recent Wall Street, Denver?
I saw yesterday, I think.
Yesterday. All right.
Oh, nice.
Good.
They had
Um,
several of them said to go into medicine as physicians, I think is what it was.
oh,
We'll see.
there you go. Nice.
Well, in some ways, it does
Hands-on
suggest
stuff.
a flight to or a migration career-wise to things that, yeah, are more in person, can't be really done to the same degree or effectiveness, efficiency as the AI?
Yeah. Lawn mowing,
Yeah,
physical
I was
things.
pretty good at that at Pecanic Falls State Park, and as a college student in upstate New York, it's darn
Good
good.
for you. Good for
Robotic
you.
lawnmowers. I don't know. That's gone.
Lawn mowing.
Right. Maybe not within the next year or a couple of years, but maybe in like 5 years, lawn mowing will be automated. um, but yeah, it does raise an interesting question, like what's going to be sustainable? Because everybody thought like, software engineering or whatever is the end all be all end game career choice. And now Claude Code is, everywhere. So just interesting to think about. But yeah, lots of interesting implications in healthcare as
And are
well.
there ways in which AI or whatever these tools can help on the cost and quality side in healthcare? That would be an interesting thing to say. What are the 5 things that are could be most benefited, if that's a word, by broader application of AI?
Hmm. And to that point, I've already seen, ChatGPT had their big announcement around GPT for health. And there's actually been several kind of AI, Denver's going to roll his eyes, but like AI, primary care doctors that have been funded and or announced recently. And so there's a lot of hype out there. Um, so I don't know. I lost my train of thought, but it's interesting.
Who pays the malpractice on those AI?
That was something else on a recent conference I was at. They were talking about, I think CMS is like incentivizing all this AI and trying to cut out the health systems from, um, I don't know, certain functions or whatever. And then the health system folks were like, well, we're paying for all of this, kind of thing. We're paying for all this innovation. So maybe they shouldn't try to cut us out. Um, it's just some more friction. Yeah. Anyway, just thought that data point around labor was interesting and um, feels like we're at an inflection point in 26, at least with the broader economy. Maybe not in healthcare yet, but yeah. Um, More policy things. I love reading and writing and learning about vertical integration. Um, there's been a lot of, I don't know, vertical integration has had this pretty big arc, right? Like starting with Obamacare and United Health Group starting Optum and acquiring all these, physician practices, SCA Health, um, moving down the value chain into like post-acute care and home health and PBMs and all the things, right? Um, and now that strategy has played itself out. All of the big health insurance companies have acquired quite a few assets across Carelon and Express Scripts and Evernorth and all those CVS, Aetna, and so now we're at the point where there's been some major reform in PBMs, um, talking about kind of like you know more transparency and pass through of rebates and those sorts of things. Of course, PBMs have already moved the profit pools, from what I understand, to GPOs and other areas. So I don't know how much this will actually do, but there is, significant movement and anti-rhetoric at the lawmaker level against vertical integration, vertically integrated entities, and health insurers more broadly, as personified by Trump during the during the State of the Union, some healthcare uh, talk. So I think in general that's very interesting. M&A has all but shut down from as far as like vertical integration is concerned, to the point to where um, Optum is divesting and decreasing their affiliate network. We'll get into that a little bit more in a second. But also at the state level is almost more interesting. Um, there are several states that have passed and or are proposing more healthcare kind of transaction review bills, which honestly is kind of um, good from an information perspective, because all of that needs to be publicly available and you can kind of gather intel on, oh, they paid this price and here's the footprint of this company and those sorts of things. So there's kind of some interesting competitive intel you can pick up from those things. But I think that as this continues to play out, this is a way for states to uh, thwart consolidation, right? Which is known to raise costs and or like hypothesized to raise costs, and that makes sense because you're bigger, so you can negotiate more higher rates and those sorts of things. And um, more market power means you're more dominant and less competition, all that kind of stuff. Um, so yeah, I think that this will have significant implications on mergers and acquisitions, and it doesn't just cover like basic, hospital to hospital acquisition or whatever. It also covers joint venture formation, uh, MSOs, partnerships, third party administrators, like real estate transactions, the whole gamut for these states. So that has implications in private equity, who's more interested in kind of like healthcare real estate. And has implications for kind of corporate practice of medicine and affiliation and IPAs and like those sorts of things as well. So it is very comprehensive in scope that these states are trying to roll out. So yeah, at the highest level, lots of rhetoric against vertically integrating and mergers and acquisitions across the board. And so you'll probably see more activity in what I would assume to be Republican friendly states in like Texas and Florida and those sorts of things. So this was another interesting study that came out in Health Affairs, and a couple of news outlets covered it. I did not because I've been traveling and busy, but it was very interesting around another data point in framework to prove out harm in vertically integrated deals. And so basically the study studied Optum and 21 physician practice, like kind of multi-specialty groups that had ASCs and those sorts of things. And they wanted to know, using commercial claims over like a certain time horizon, what is the kind of impact on like rates and cost of care in these commercial claims over time for like certain procedures, common procedures done, or something like that. That was kind of like the study setup. And what they found was Optum did not acquire groups that had like larger HOPD presence or like hospital presence. They actually acquired groups that already were putting a lot of procedures into ASCs because then they could apply their own rates to those ASCs and just engage in kind of like the classic mergers and acquisitions arbitrage, excuse me, where you acquire a group and then apply your national fee schedules to that group and get a lift. And so, as United Health Group has been suffering in the public markets, their strategy has been questioned and poked and prodded, and now we're kind of seeing the other side of what they've been doing. And as it turns out, you can't really call it vertical integration. You can more so just call it like vertical amoebaization because they have not integrated to this point. And I think that they're finally seeing the ramifications and consequences of doing that. And on their most recent earnings call, talking about full year 25 and 26, they had this huge reset organizationally, a lot of headcount reduction. They dropped their affiliate provider network by 20%. They reduced their EMRs from 18 down to 3. And everyone else is questioning, why didn't you do this in the first place? It probably would have helped you a lot more strategically to know what was going on, especially as you were like engaging in this, we can now call it financial engineering, although I think we kind of all do that all along. M&A arbitrage strategy. It's all it came down to, in my opinion. So from a broader perspective, I think studies like these will continue to emerge and provide frameworks to lawmakers to potentially prove out harm on costs and quality and vertical and consolidation within markets to create frameworks that ultimately like kill deals before they happen in the future, possibly. So that combined with state regulatory review, which will probably continue to increase in prevalence, will kill the investment alpha of a lot of buca services activity, in my opinion. Okay. I feel like I'm rambling a lot. I hope it makes sense.
Blake, one thing to think about is it'll take a while. I mean, I think the trend that you identified is the way you're framing it is really helpful and good. But getting more sophisticated states in the water on this, I think, is an important trend too to see, because historically, this is a sort of step beyond where they've played in the past, played effectively anyway. But so it'll be a while though before the US DOJ sort of takes a significantly different approach if we're waiting for the next president, right? I mean, it may,
yeah.
But if Trump, he can reverse course quickly if he thinks there's political or economic benefit in expanding what DOJ is doing now or their approaches or whatever, he'll do it.
Yeah, for sure. And something I'll fast forward to or point out, I can't remember. Oh yeah. This was recently announced. The DOJ sued Ohio Health basically for their all or nothing contracting strategy. Basically say like, hey, you have huge market presence, to do an all or nothing, like all in or all out on the provider assets, facility footprint is anti-competitive, especially with your own plan. And so that is a development that I think we should watch closely, because that has, significant implications for payer contracting. If they can say, hey, we pick and choose this facility from your network, that has significant implications on ambulatory growth strategies and quality and how payers define quality. And it's going to just create more animosity if things like these get proved out, and then that precedent gets set in court that you can't do all or nothing. That's
good point.
Yeah, but great thoughts, Jim. I totally agree. More state buy-in will be the catalyst in that trend. All right. We've already touched on these things a couple of times, but I really think the meat and potatoes of this year, start the year, and really like the past few years, since utilization has increased and in Medicare and all those sorts of things, has been this kind of huge Medicare Advantage shakeup. KFF, I would highly recommend. I'll share this link in the community hub after, or the presentation in the community hub after this presentation. But KFF put out a really good analysis on kind of the state of Medicare Advantage, updates on like characteristics of different plans, where actual growth is happening, total penetration, and those sorts of things. And so to date, a lot of people thought that Medicare Advantage would decline for the first time in enrollment in 26 or in 25 or in 26. I can't remember. I think it's 26.
26.
It in fact has not. It expanded by another 1.1, basically in line with 2025. So that's kind of telling, like the whole narrative, the entirety of the country on the healthcare side is like against Medicare Advantage, and for good reason.
What happened? It went up by 1 million.
Right.
And what I read partly in the Kaiser thing is a lot of it was special needs programs, SNP, but still net, most of the sort of independent analysts, including CBO, were saying it's going to go down by 1 million. And it didn't. So it's resilient, and there's some places where people are still voting in. It's interesting to explore, what's driving that. And KFF is good. They're left of center, but their analytics are good.
Agreed. Yeah, their media content can be a little biased, but in a good way. Lots of investigative journalism and those sorts of things. But there's always one player that seems to smell opportunity, and this year it was Humana. Last year I think it was CVS. CVS got crushed, and they since pulled back. Humana is currently getting crushed by investors, and they have doubled down I think I have another slide for this actually, so I'm getting ahead of myself. But they have doubled down and bought Max Health for $1 billion. So while they're getting crushed on the membership side by, pricing for growth, they're also putting a $1 billion hole in their balance sheet and in an area that has a high utilization environment. So basically, the writing is on the wall potentially for Humana. There's a lot that they have to prove in 2026. So that'll be interesting to see. But overall, the big headline was the rate increase, which was like flat, right? Essentially.
Yes.
And I think that was dropped maybe on like the day of United's earnings call, which was fun. That was a fun day for them, I'm sure. And so, yeah, this just continues to go with the overall managed care woes narrative. Like all of these players are now vertically integrated. They're getting crushed on that front regulatorily, high utilization environment, flat Medicare Advantage advance notice. And then that has downstream effects as well. So they can't provide as many benefits to members, or they have to go deny more care or go out of network, or those sorts of things. Lower prices offered to health systems, and so kind of like the two downstream effects that I'm watching as a result of this are, what is the overall effect on downstream risk bearing organizations? Like, are plans, will we see a resurgence and or a dead cat bounce in value based care because insurers are going to be more willing to subcapitate in Medicare Advantage? So there's like more willingness from like risk bearing groups to take on those lives. So that's one thing that I'm just interested about. The other thing that's interesting is just the continued friction between health systems and Medicare Advantage plans. Um, Everybody you'll talk to on that side will say, yeah, Medicare Advantage is like net traditional Medicare. It's like, 85 cents in the dollar, right? And so the other thing that is concerning to them is they say, well, okay, if we go out of network, we could lose like a huge chunk of volume that is like still keeping our health system afloat. And so there was an interesting article on Becker's out from Scripps Health where they chose to like largely go out of network and like I think maybe they shut down their provider plan or something like that. Like they way downscaled, and then they actually engaged the patients and tried to get them to switch over to traditional Medicare to benefit them financially, but also you know so again, like the patient kind of gets lost in that, right? Because like, is that what's best for the patient? Like, who's to say? But there's just like a lot of games going on back and forth between health systems and payers, and that's kind of par for the course. But all of this coming as a result of kind of Medicare Advantage top line pressures. I'm going to pause and take a drink of water. Hey, Ann Summers, how are you? I just noticed you popped on.
Hey, good. How are you?
Good. Are you enjoying my rants, my monologue?
I came in somewhere in the middle of this slide, so I missed kind of
Okay.
everything before that. But I did enjoy your recap of LA last week.
Oh, thank you. Thank you. That was fun. Yeah, Vive is always a good time. Okay. Let's see what else I have. Oh yeah. So I thought this was very interesting too. Kind of like on similar things thematically. Inhabit Home Health and Hospice just announced they are going private through a private equity sponsor. Kinderhook. I don't know. I'm not in the industry. One of those names. They are taking them private, but Inhabit's history and kind of the activity in home health kind of surprises me that they weren't acquired by a strategic player like a payer. And maybe that has something to do with the kind of M&A environment currently in the FTC and all those sorts of things. But they're going private after getting spun off from Encompass Healthcare in 2022. And then there's some other kind of interesting, weird, like litigation stuff that happened behind the scenes with Inhabit. The former CEO was April Anthony, and she started a new company called Vital Caring. And then Inhabit and Encompass sued Vital Caring, saying they were under a non-compete and like they were working on this while they were at Inhabit and those sorts of things. And the current result of that lawsuit was like Vital Caring has to pay out like 43% of their profits to Inhabit or something. So I was like, that seems like a pretty significant number for a home health agency. And I don't know like what the ultimate result of that will be, but that was the latest thing I could find. So just a little bit of like home health tea for you for your Friday afternoon. Um, but the other thing, kind of from more like a high level thematic perspective, was like if you're trying to drive down costs in the healthcare system, home health is like potentially a great avenue to do that, because it is like a lower cost setting and more convenient for patients and those sorts of things. And buying up home health assets was all the rage back in the day, like kind of post COVID, pre COVID era. And now I'm starting to think like, maybe that was just because of, you could code better, like better risk adjustment for your members and engage them in those sorts of things. And maybe that combined with like muted M&A activity and managed care woes means like they didn't want to bid on this deal. So just kind of like a data point to think about. On the investment side, I do think it's interesting that, a private equity player is dipping their toes back into healthcare and taking a healthcare services company private. I think that's possible. We'll see beleaguered areas like home health, which is dealing with rate compression on the Medicare side, like value-based care, like the Agilons of the world, those sorts of folks. Like maybe we'll see some more kind of activity there and just kind of more roll-up plays in general in those areas. So just speculation, not investment advice, but I do think those kinds of data points are interesting. This is less my area of expertise, so if somebody else wants to comment on it, feel free to. But I do think it's just relevant for the industry at large, given drugs are a big part of the industry, right? America loves drugs. So these were the negotiated, announced drugs for, I believe, 2028. And CMS gave some statistic around it. They basically said, hey, if we had negotiated these drugs at this utilization level, we would have saved $12 billion, which is just kind of hilarious, like stroke of pen and $12 billion less spent on healthcare, which is like the amount that all of health tech received in fundraising in 2025. So that's besides the point. But it gives you the scale for how much is being spent on drugs. But yeah, so something that's interesting. And yeah, go ahead, Jim.
No, I was just going to say, I think I had to do some work for a little assignment I had a couple of weeks ago, digging back into the various negotiation programs. And I think, to me, negotiation has reached a sort of legitimacy, even among Republicans, to have the government get in and do something more. And that started when, of course, with the legislation, which set up this process, right? Which wasn't supported that much by ours. But Trump's going after the individual companies, 16 separate agreements, and he loves MFN. And MFN is a very effective way to drive down prices. I know that from my days in pharma way back when. So to this, we're all talking about all these incredible details, but negotiation is with us. It's not going back. It's just expanding.
Yeah.
And I think it's going to be very interesting to see how it plays out and can be used to, bring, if it's used well as policy levers, it can bring down prices where the market isn't really doing a very good job and still provide good incentives for innovation. But there's also broader risks to innovation if it's just overdone, I think, over time.
Yeah.
But it's amazing. And the numbers are huge in terms of the what would have happened absent it in the weight loss area and a lot of other places too, with the really high cost specialty drugs. I mean, I don't know if Eliquis is on this one, but if you look at some of those products, what those late stage Keytruda and some of them, I mean, they're just amazing.
Yeah, agreed. I does it incentivize? I don't know, because the counter to the cap, like the senior cap, is higher premiums, right? So
At
how does
some
that
level
play out?
for Part D, maybe for drug only plans, maybe, but arguably over time, if drugs are bringing down other health and a fully integrated plan with, hospital, doctor, everything, including drugs, if your drug spend is lower, you can spend some money, you can keep some money and spend some money on some other things that you wouldn't have otherwise.
Yeah. I think it's interesting. Gosh, I was reading something. I think it was from like a Republican think tank because it was biased, but I think it was Paragon. Have you heard of Paragon?
Paragon
Yeah.
is, yep, they're
Yeah. So they had some data around Inflation Reduction Act, certain provisions like causing like increases in spending or something. I'll send it to you guys and see what you guys think. Because I don't know enough to like truly understand like who's right,
Health Tech Nerds in their last week's newsletter, so that had been like the 22nd, opened with a piece on this and like kind of the juxtaposition between the attempts at cost savings and kind of the impact on like drug companies' forecasts. I don't know, the reading it just creates a lot of cognitive dissonance, but it's a good analysis.
Yeah, okay.
what's that? Health Affairs?
Oh, Health Tech Nerds, HTN.
It's called Health Tech Nerds, Jim. You would probably like that newsletter too. It's very Kevin and Martin, I think is his name. They do a really good job.
Yeah.
Yeah, so obviously I'll leave it a really, really vague consulting truism, It'll be interesting to see how things play out, and we're watching this area closely. Side note, when I used to be a consultant, that was how we would always like end the analysis, because you can't put your stake in the ground, you can just say like, we're industry analysts, So it's just funny. Okay. We already talked about this, but this was the Cinerwell deal for Max Health, which a lot of folks found surprising given the dynamics already discussed with Humana and how they've priced for growth, and now they're spending $1 billion on senior advanced primary care asset. I think that the play here is probably like Cinerwell. If I had to guess, I would guess Humana already has and or had a bunch of Cinerwell locations in adjacent areas to Max Health, and so they're probably trying to build out a more dense network of senior primary care facilities in probably an area of high spend in Florida, aging population, those sorts of things. So that's my guess around the play. But in general, it seems like there has been, like I mentioned, like just a little bit of a resurgence in value-based care and interest in primary care and risk. Honest Health is another company. They received $140 million in funding this week. And then there's been some kind of specialty value-based care folks receiving deals. I want to say there was a kidney care company that got another tranche. And then just renewed interest in value-based care with Access coming out with their kind of rates, and Lead, which is the next iteration of ACO Reach. So, but yeah, long story short, the Humana's CEO has a lot to answer for in 2026, as portrayed by the stock price. Not to beat up on them, I just think that's the sentiment. This is another analysis. I just wanted to pop in there just with kind of current health system dynamics. I feel like more or less right now we are at peak hospital and we are going to be entering a potentially deteriorating landscape when it comes to margins. Um, just my 2 cents. I could be wrong, of course, but the writing is on the wall. The healthcare industry, whenever there's a cut somewhere, everybody loves to talk about how the sky is falling and those sorts of things. And obviously, they will find ways. Everyone will be fine. But, there are pressures in new areas and things to circumvent and those sorts of things. But overall, hospitals on the flip side to managed care woes, they have really enjoyed increases in utilization, coding and AI, and the ability to document more and more accurately diagnose has been provider heavy and provider centric. I would say that it has been outsized benefits to providers. And then all of the tools around, like virtual nursing and centralization and those sorts of things are good from an administrative, streamlining and those sorts of things. And so the interesting dynamic that's playing out is a lot of these larger scaled health systems that have the right asset makeup and are in growing markets are seeing disproportionate success relative to their peer groups. Think about like the Baylors of the world, Advent Health, HCA, a few others, Intermountain. These are kind of the price makers, right? As folks in the industry like to say. And then the price takers, on the other hand, are in markets where, maybe there's more heavy payer market concentration, or demographics aren't as great, or, heavy Medicare, those sorts of things. And so their margins are kind of less sustainable, flatline, like those sorts of things. So that's kind of like if you read industry analysis, the kind of consensus of the current state of health systems is the bifurcation kind of effect.
Quick question on this, Blake.
Yeah.
The orange lines, like that's because it's lower than it was last year. The green lines, it's higher than it was last year.
Yeah. Expansion versus contraction.
Okay.
And so, yeah, just an interesting data point on this graph is that the data is positively skewed. So there are like more larger systems that are doing like way better. And so like the average is above the median, that's what I understand from a stats perspective. So basically a lot of the public company commentary around kind of, hey, what are the downstream effects of, ACA membership decreases and those sorts of things? A lot of folks are basically saying we're going to see anywhere from like 15 to 30% membership payer mix drop in that category. We're assuming, a third go back to employer sponsored insurance. We're assuming a third go to cash or uninsured, and another third find another plan or something like that, right? To that effect. So there's this is one of the bigger levers that's going to kind of be driving conversation in earnings calls and with hospital systems is how does that play out over time? The other big lever being kind of supplemental payments and reform there. I think that's potentially on the horizon with kind of, as if you lose Medicaid days, then that affects your ability to get supplemental payments and those sorts of things. So that has financial implications. Other than that, strategically, every big hospital system is saying, how do we expand our market presence? How do we build out more urgent cares, freestanding EDs, physician practices, ASCs? I can literally remember like 3 years ago, HCA was saying, yeah, we want somewhere around like 10 to 12 ambulatory facilities per hospital. And now by 2030, they want to get to like 18 to 20. Like that is in the span of, 3 to 5 years that rhetoric has changed, which in my opinion is pretty telling in healthcare. So take that for what you will.
What
How
do
am
you
I
think
doing
are
on
the
time?
biggest drivers?
Oh.
I mean, obviously there are a lot of headwinds and tailwinds, but what do you think are the biggest ones?
As far as ambulatory expansion,
Yeah, like shifting the number up from 12 to 18.
I
Or I
think a
guess you
lot of
said
it,
10 to 12 to 18 to 20. So it's almost
yeah,
like it's up to doubling it. Like
it's like
what do you
double.
think drove
Yeah,
that?
yeah. No, that's a great question. I'll need to look back and see exactly what it is, but obviously there's been like a lot of talk around like site neutral and
Mhm.
patient experience, those sorts of things. I think that a lot of it has to do with like, you know, the writing on the wall is that care is being extended beyond the four walls of the hospital. And so
Yeah.
how do we prevent network leakage and continue to preserve margin, but also like feed acuity into our already existing higher cost of capital facilities? Well, to do that, we need to be in the access points where people are, as far as like suburbs and like those sorts of things, and
Mhm.
feed the mothership. So um, I think that's some of it. Um, I need to go back and look at like what are the main catalysts behind it, but that's kind of generally what I would guess. But curious for your opinion if you have any thoughts.
Yeah, I don't know. I don't follow like health system strategy as closely as I used to.
Yeah.
So I think you would probably know that better than me. I also wonder if it would be like different drivers in different markets. Um,
Yeah. No, I think I agree. I think the other thing too is that like just the traditional hospital model is not as feasible, right?
mhm,
Like and outpatient care is incentivized financially and higher dollar, higher margin, right?
mhm.
And lower capital required to do those things. And so maybe there's a component of that as well.
I guess one idea that I had when you were talking about that is I wonder if any of the shift in regulation around or legislation around hospital at home, because like during COVID, that was such like, oh, this is going to be the new way. This is going to last forever. It's going to be everywhere. And then maybe when like love for that cooled off, it's like how has that changed the um, ambulatory footprint, like needing to increase? I don't know. That's
Yeah.
all conjecture. I have no data to support that.
No, I mean, I think that there's a number of factors, and hospital at home definitely is one. I mean, of the health systems that are kind of stuck with that program, they've seen success in like, length of stay management and those sorts of things. And patients seem to like that a lot more. So I definitely think that's part of it for sure. Like patients want to be in more convenient settings. And I think that's more of like a consumer focused thing that is driving behavior. And I think we'll probably continue to see more of that. Especially like digital front doors, like a huge buzzword in hospitals and health systems, right? Like, here's our digital engagement from last year and our active users and all that. And like, a lot of that's fake because you just like need, flu medication or whatever, right? But,
Right.
um,
Like you're an active user if you looked at a lab result.
right. Yeah, exactly. But there's also like something to like, how can we stay in front of our, patients, in front of our markets and customers, and a very compelling way to do that is by, you have the app and then there's a clinic down the street, and then, oh, well, now you need an MRI, come into the hospital. Oh, now you need surgery, that like that sort of through line, I think makes a lot of sense for like market share capture and preservation and brand, right? Like perception, those sorts of things. So, yeah, it's a good question though. Okay. Last thing really, I think Cerner and Oracle, they're just like a dumpster fire. I don't really know anything about them, but they are talking about how they just bought Cerner for like 30 billion. And now they're talking about selling Cerner. And so I don't know, it's just like a whole thing. It's just funny to me because like I've been at conferences where Oracle's CEO came up on the stage and talked about like, you know, health system their like whole transformation and healthcare strategy and like AI native EHR and all this stuff. And now he's going to sell the thing. So that's interesting. Sorry, lost my train of thought, but that's everything I got. Thanks y'all for hopping on. It's great to see you guys.
Thanks for
On the
doing
lookout for the
this.
next one. Of course. Yeah. For everyone else potentially listening later, this will be obviously recorded and uploaded. So hopefully you guys find that helpful. All right. You guys have a good rest of your day.
Have a good weekend. Bye.
Good stuff. Thank you.